let's just wait.
Okay.
Okay. Are we ready? Okay, I'd like to call the Joint Village Board and Finance and Personnel meeting to order. Roll call, please.
Trustee Allison Williams.
Present.
Trustee Paul.
Here.
Trustee Zerbal.
Here.
Trustee Mark Williams.
Here.
President Kardowski.
Here.
Trustees Bukowski and Malcheski are excused this evening. Finance and Personnel. Trustee Williams.
Here.
Trustee Zerbal.
Here.
Mr. Dowska.
Present.
Mr. Selk.
Present.
Trustee Malcheski is excused.
Okay, please stand for the Pledge of Allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
And please remember all the members throughout the world in uniform. Okay, I have no changes to the agenda.
Move to approve the agenda.
Second.
Motion and a second to approve the agenda. All those in favor say aye.
Aye.
Opposed? Motion carried. Number 5, action items. 5A, 2020 budget. Before we start, I have to say that Mr. Diener will explain what the state does to us in the equalized assessment ratio. Because they changed our number, the state that is, we started out in a pretty big deficit this year, and I will tell you that Greg and Allison really worked hard, and the department heads had to give some of their stuff up. I will say that we had some generous community members that gave, the Lions Club gave to our Moby Mat. They gave money for that. They donated money, and Bob and Amanda Watson donated the money for the flags, for us to get new flags. So that was really nice, and I like to thank all those corporate citizens. So anyway, so now we are at the 2020 budget.
Thank you. I'd like to echo those comments as well.
I don't think it's
Turn that
on.
on.
It was working. Well, let's take a gander.
There we go.
Never did.
I'd like to echo comments and thank staff. This is always a grueling process. It starts at the end of summer when there's a lot going on in the village. So for the staff, it is part of their jobs, but yet it's a challenge, and working together is easier because we work well as a group and a team. So thank you to staff, and thank you to Allison and Mary for being as cooperative as well through the whole process. So Mary alluded to something that's kind of critical to this budget. And it's a piece of the budget that is never ready in time for our meeting, at least for the publication. The state doesn't get final numbers out till early mid-November. One of those is called the assessment ratio. It's basically what the state does. It takes valuations and they try to match up market rates to assessment rates, and it has an impact to our tax rate. It's an equation. We take our levy and it flows through equalized values with and without TIF, and then comes across the assessed value. So I wanted to have Mike Diener, who's a village assessor, kind of just give a high-level explanation of what that means, and why we have we talk about that ratio a lot, but it has a significant impact to the tax rate. So I'm going to let Mike just give a brief explanation as to the status of the village and what the state looks at and what they do with that ratio.
First of all, when you see the ratio going down, we're at roughly 100%. Well, we're at 95.2%, 95.3%. When that ratio is going down, that means market or values are going up. We don't set the market. We can only react to it. What property owners are paying for property, we have to adjust the state has to adjust the equalized ratio accordingly. And what they look at is every sale that occurs, we have to identify what the assessed value is on that sale, and they establish a ratio. And it's always a small sample. In this particular, what we're looking at now is the sales that occurred in 2018. The overall value of the village is roughly $2.5 billion. There was sales of about 59 million, 58 million. So we only had about the state only had about 2.4% of the overall value of the village to establish this ratio. So it's an imperfect practice, but it's what they use and what they've been doing for many, many years.
Right.
So you look at if a house is assessed at $100,000 and it sells for $110,000, we're at 90%. And their analysis is always late in coming out, but based on the sales, and it is true, based on the sales, we're in a strong market right now, and based on the sales that occurred, actually in 2018, our ratio for 2019 is 95.25%. Unfortunate for Greg, they are very slow at getting this ratio out every year, and there's no statutory deadline to when they have to get it out. It's when they're ready. Any questions?
Diener, one question that I have, some of these homes that have been selling in the, let's say, the entertainment district, with the high value they are selling for, does that have something to come and play with what we're facing right now?
We look at outliers. First of all, we did a market adjustment a couple of years ago, and those that neighborhood per se was addressed, and those values, those assessed values are pretty much reflecting what they're selling for now. So that would not play a big part into
It wasn't, okay.
No.
Okay.
So then our just to kind of piggyback on that, are other communities in the same situation as we are because of the strong housing market?
For the most part, yes. The rural areas haven't seen as great of appreciation as more of the urban areas. And we assess for a good part of Brown County. So I can speak for like Howard and Hobart and Swamico. They've seen somewhat of the same appreciation. What that appreciation was, what we call it as an economic change, was about 6%. So we're looking at a 6% appreciation in the properties in 2018.
Okay, thank you.
So based on the ratio, Mike, at 95%, when do you anticipate another reevaluation of the village?
20 years. I don't know, that's a conversation for tonight, but if the market continues to appreciate, if the market continues to be strong, 3 years maybe, something like that, I would
So
say.
when it hits a certain percentage?
Well, once it drops below 90%, we have 4 years. Typically with a market adjustment, we don't wait till that last year. Once, I would say in about 3 years is what.
So
Now,
this is only,
the market this year, now we're looking at this change in equalized ratio is really based on sales from 2018. And this is not taking into consideration any of the appreciation this year. And the sales that we've seen so far this year are mimicking of what we've seen in 18. So all indications are, the values are going to be going up more, and the ratio will drop again next year.
but if it's only been 2 years since reevaluation, you
Right.
get to 95%.
Yeah. All likelihood will be out of compliance in 2021.
So we've previously discussed doing it every 3 years, and now, given that we just did it, and that we've dropped this much, we did discuss briefly, do we go ahead and do that so we don't suffer again next year to some extent? But it's a little bit like kind of chasing your tail. You're going to increase your budget in order to pay for that modification and change, just to kind of keep things level. And then if there were to be any type of economic downturn, then it could level itself off. So it's a little bit unpredictable, if you will.
Is the valuation based on just residential property, or is the business involved, commercial property also involved?
Commercial as well. Commercial and residential.
In a report from the state, our residential property, I believe, went up 6%, and our commercial valuations went up 7%. We are about 60% commercial manufacturing and about 40% residential. So I guess one could argue that because we are so light, if you will, on the residential side, our impact from just the residential might be less than, say, a Howard or a Hobart in terms of what it's doing to our value. But in our case, that adjustment that the state did was 7% on the commercial side, so it wasn't any better, you know, in terms of where we are.
The sample is always small. Like for the commercial, there was only 20 sales that they could use to determine that change in that economic change. And for the residential, it was 158 sales. So as I mentioned earlier, it's a small sample that they're using to put this ratio on everybody's property.
Okay, any more questions for the assessor? Okay,
Thank you, Mike. So what does all that mean when it comes to the budget? What it means is, all things being equal, that ratio change alone, we had to start with $1 million gap in our budget to maintain the same tax rate. That was our starting point. So that's the challenge. And that gap is, I should take a half step back, is what staff submitted for a budget. Okay, so all things being equal, we would have had to reduce our levy from what we had budgeted last year. We would have had to reduce our levy a significant amount to maintain the same tax rate. So that's why in this budget, as a starting point, as we start our discussion, at the end of the day, the final numbers came in. We're looking at a 1.1% increase in the mill rate, in the tax rate, to go from 562 to 568. And that's the assessed rate. That gets us $10,297 more dollars of levy. So we're able to, you know, get what we need, provide the same services, still add, you know, slowly add in other areas, replacement of equipment, of all the stuff that we have in the budget at a 1.1% increase, but it only amounts to $10,297 of additional levy. So it's a challenge. It's a big, you know, not to make light of it, it's a big puzzle. There's a lot of parts, a lot of pieces, and it's just, you have to kind of manage through that whole process. So I wanted to give that overview, that high-level overview, so you understand, you know, where we're at, where we start, so as you look at these decisions, you can understand a little bit more what we had to do. So as you go through the book, a couple things I wanted to point out, and I'm going to kind of bounce to page 119, if you will, in the book. It's our debt service graph. So when we get our levy, the first thing that we do is what are our debt service commitments, and those are the first dollars out. So we set the rate, we set the levy at $12,558,518, and from there we kind of work backwards. First commitments are debt service. We have to pay those. Those are for all the projects that have been approved in the past, from Oneida Street through, you know, more recently Mike McCarthy Way, et cetera. We've got debt service commitments. Some of those are in TIF. The TIF will transfer funds in to pay for that. But this graph that you see here lists out the debt commitments over the next 5 years by general fund, which would be our tax levy dollars, the referendum, which was approved, that's also part of the tax levy dollars, and then the three TIF districts, which they receive taxes, and then those dollars are transferred into this fund to pay that debt for those particular TIF districts. So what you see there is we've got a high value in 2020 and 2021 in the general fund debt. Oneida Street finally comes offline after 2021. And that's where we have a big $495,000 drop in commitment to the levy. So that was one key piece of this budget that we addressed with something we're proposing. But I wanted you to see that graph because I think it helps lead to where our first commitments are in the budget. Then from there, we go to capital projects. Our biggest one is $675,000 going towards road reconstruction, our mill pave program, which we've addressed annually, and that's just using tax dollars. We don't bond for that, we don't borrow for that, and it's been working since our inception, and that's, kind of how we try to always, those are the two key pieces, debt service and road. And then from there, we kind of look at everything else. So that's kind of the starting point of the budget. The other graph that I know Mary likes to see is on page 2, a little chart of what does that mean to the taxpayer. And so what I've done, and obviously this is altered a little bit because that tax rate has changed. So we're looking at about $911 roughly for the average tax payment. So the average home valuation is $159,200. So if you put that out there, what I've listed is what would that mean to, and you have a little check register there, what people are paying for the services. So you break down that $911, and that kind of walks you through what they're paying for. They are
903.
Pardon me?
It says 903.
It says 903.
I'm sorry. That was the number. So I said we got the new assessment ratio. So the new rate would be it would be like 911, but
Okay.
so it's not much different.
Yeah.
So the 903 was the preliminary tax at 567 versus 568. So you can walk through that. It's helpful. I think it helps break down to the public that, hey, I'm paying $9.44 for snow removal. Not a bad deal. And I'm paying, at the end of the day, I'm paying for public safety, I'm paying $381 a year for public safety. That's fire, rescue, police, all those services. So as you go through there, I think it's a helpful chart for the taxpayer when you break it down to what they're paying.
I know I was talking with someone, I always like to look at this because when it breaks it down, what the village gets. For sanitation, which is garbage, recycling, wood chipping, and yard waste, it's $46 a year. I know somebody on their tax bill, they have to pay $176 a year just for their trash. So it's, a lot. And that's for a whole year. The pool, all the aquatic stuff that we have in the village, $33 a year. That's $3 a month, less than $3 a month. It's amazing to me. So, anyway, I'm sorry, go on.
Well, those are kind of the points I wanted to bring up from here. I guess I'll leave it up to, we normally then start going through the general fund. We walk through the revenues, we walk through the different expenditures, and then get into department detail.
Okay.
Sure. Yeah.
So if we can kind of give you one other bit of information in terms of the overall budget. Because of that equalized value change, overall, our levy is more or less the same from last year to this year. But one of the other issues that Greg, I think, had already touched on was our debt level for 2020 and 2021. So Greg has kind of come up with a proposal that kind of fits in with the budget. It goes more to item number 2, but I think in the greater context of the entire budget. So he's just going to kind of touch on that proposal in terms of, if you don't buy into that, the whole tax rate has to change, I guess, is what we're going to.
And so that's what she's referencing. Item 2 is the next item on the agenda here after the budget meeting. If you recall, back in 2017, we had a large amount of excess funds due to the Clipstein Park remediation settlements and the tune of $2.3 million. And at the time, we had committed those to future use for whether that was capital projects, debt reduction, those types of things. In 2018, we used $1 million of that to fund Mike McCarthy Way Road reconstruction, and we transferred $250,000 to the Village Building Fund to help aid with the boiler replacement and help replenish that fund. We had done some HVAC and Village Hall carpeting over the prior years. And then we also transferred $240,000 to the Employee Retirement Fund. We're proposing to help with this budget. I talked about the debt service gap there, where it's going to come down in a couple of years. There's some proposed use of those funds, specifically $600,000 to transfer the debt service fund to buy down on that debt over the next 2 years. And that helps ease the tax burden today and next year. We don't have anything currently necessarily in our long-term planning for borrowing in the general fund, so that fund level or that commitment level that's about just under $400,000 would remain flat after 2 years. So $600,000 of use would help fund that. We're looking to transfer $117,000 over to the Village Building Fund to help pay for some needed parking lot projects at the village. We've got the south, the north, Doug, what other three, right, over the next couple of years? I think it's the south, the north, and the one out front here.
Starting next year, we'd be doing the south parking lot, the one closest to the stadium. And then we'd be moving our way to the north parking lot, which is the public safety parking lot, and then finishing up in the third year with the parking lot out front. If you've traveled into the south parking lot, you've seen from the construction and just the years that it's been out there, it's in pretty rough shape, so that's why we're putting that one in first.
So are those commitments figured in this, calculated in this
Yes.
budget?
So we, remember the $1 million starting point, this would help bridge that gap. So it was funds that would have been pulling off of potential levy dollars, or that we were able to use these funds for. And the other one was transferring just under $36,000 to cover hopefully the last of any remediation issues at Clipstein. There was another one that popped up this year along Burger King in that area. And so those had not used these funds, we would be looking at either increasing the levy an additional roughly $900,000, or finding something else to take out of the budget.
So you're really providing tax relief on the debt side for both 2020 and then 2021. And then part of in terms of the parking lot, it's kind of a long-term one-time expense. And instead of putting that in there, we have the funds in there. It's more about that account would get depleted so sharply that we are not increasing what we're contributing into that account, into the building maintenance account. So we have funds going into the future for other things. If that makes sense? Sort of. I see one head nodding.
Well, I think that using those funds for one-time expenses is a good move. I don't think we want to use it for ongoing expenses.
Correct. And that's what most of these are. The debt service, the big one was Oneida Street, and
Right.
that was a huge cost item that we won't see that type of cost in roads for some time. So and like I said, that the long term, the 5-10 years on the general fund debt is relatively flat going forward. It's just getting through the next 2 years, it drops down and sustains at that point.
What'd you say, Greg? You got a couple years on the United Street yet?
Yeah, 2 more years. So
Okay.
that will drop from 2021 into 2022. The debt service commitment drops $495,000 each year. I mean, one time, and then it levels off down just under.
So we think it's kind of like basically trying to get over a hump, if you will, and then your overall debt is so significantly lower. We're just using it to help in the next 2 years to kind of ease that tax burden. Again, if our equalized value or equalized ratio should change, it's going to have a different impact as well. But we anticipate that if we don't do a reevaluation next year, we're going to be in the same predicament where you're going to have to try and levy the same, relatively the same, but your tax rate would still probably go up. So this avoids kind of having that as much of a great of a problem into 21 as well.
So if you look at the graph on 119 again, you got the high debt service in 2020, but you have another spike calculated in 2023. Is that going to, by reducing the debt now, will that reduce that?
I mean, I'm going to apply, of the 600, 300 goes towards 2020 and 300 goes towards 2021. So we can spread that out over 2 years.
But in 2023, you jump another $3 million.
That is TIF debt. And that's callable debt that will, so the big spike in 2020, for example, that TID 5 debt, that large orange graph, that is the NAN that we approved. That's going to get refinanced next year, so that will level itself off. The TID 3 debt is a large ending payment that we manage, that the long term, that TIF debt starts to drop after that one significantly. So that's TIF, that will be funded through TIF dollars. And the increment at that point in time will be picking up that will cover those payments. That green graph there is not general levy dollars.
We also anticipate closing TIF 4 around that same time, potentially 21 or 22, in the year 2021 or 2022. So that's also going to have an enormous impact on what this whole page looks like. I mean, obviously, you're going to pay off the orange columns will all get paid off into the future, be held in reserve to pay that off. But you'll start to see some obviously there's some tax reduction in terms of what happens once the TIF is closed as well.
Well, that's going to show a big spike in our valuation at that time then too. So you should have a reduction in your mill rates.
No, because the valuation is still there. It's still there in terms of how we see it. It's,
We'll see it now, not the
no,
TIF,
well,
general fund.
we'll all see it, but your tax rate will go down.
Yep.
Once you close it, correct.
Does the state still have the rule that you can only realize 50% of your TIF?
Yeah.
Yeah, that's what I thought. Okay.
Will this have any impact on, I know it gets brought up once in a while, with our credit rating score? Is it Baird that takes care of us?
Baird
through that?
does that, and then Moody's is really giving you the review, but more of that we have the money to make the payments, we're making the payments. What probably affects it more is what is your debt capacity, what's in your reserves, how are you overall managing your money. So every time we go to do a borrowing, we have a lengthy call with Moody's to go through, what's happening in the village, what's happening with your projects, are your values going up, do you have large businesses closing, what other planned debt do you have coming up, all of that. It's kind of looking at your overall financial picture. There's not like one thing that's gonna skewer you in one way or another, and overall, we're pretty stable. I mean, we're well managed and well reserved, and it's generally not a very exciting call, because a lot has not changed, and that's a good thing.
Okay.
So to answer your question, no, this is not going to impact our rating. They're focused more on fund balance, and we have plans in place for the districts. They talk specifically more on the TIF districts and how we plan to cover, and we go through that quite extensively, so.
'Cause I know we've talked in the past, and it explained to me that they always like to see things level and not spikes and valleys, and but switching the funds and things like that's not going to have any impact on, or
They
minimal.
get more concerned, like, say we didn't budget for it and we had no money for it overall, like we had to go dip into reserves to pay it because we didn't want to raise taxes or something, that they would be concerned about. And in this case, although it looks like it's steep, it's just because we haven't been borrowing money like we have in the past. So that it's like paying off your mortgage to your house and not buying another one. It's kind of where we're headed towards. Not that it's totally like that, but.
Yeah, okay. Yeah.
So overall, the point of that discussion was, if you're not buying into that or have some concerns with that, and we intentionally put that as the second item on the agenda, so that if you wanted to change it and you don't want to do that, then we need to change the budget, and then you have to figure out what you're going to redirect of 2017 at the end of that, okay? Does that make sense? So you kind of need to solve the budget piece and then this piece, but we're kind of giving them to you all together because they work together. And so, go ahead.
Would this use up the remainder of the 2017 excess funds then?
It would, yes.
Okay.
And it's not bad. That actually came up in last year's audit. I think that it's nice to have the funds available, but I don't think it's a good practice to hang on to them for 5-10 years. Mm-hmm. So I think there was talk, okay, what's your plan? When are you going to use these funds? And so it's probably the right timing as well.
Okay.
So overall, if you understand that, I think where Mary and Greg were headed next is like kind of, so now if you want to dive into the budget questions and ask any questions that you have, or how you want us to go through the budget overall, we can start on that. If there's no other questions on the overall premise of where we're headed.
I personally think, I got two thoughts. I think it's not a bad idea to go through some of this briefly to understand, so we understand where you're going with it. Mm-hmm. I don't believe there's a lot of discussion in it. I believe in what you people do, and I respect your judgment on that. But people do ask us questions once in a while, and by going through it briefly on things that we do bring up, I think is beneficial for all of us.
Okay. Well, I would recommend that we start then with the general fund revenues on page 10 and 11. And that would be,
Can we go back to page 7?
we can do that too?
Did you say 7 or 11?
7.
Sure.
And as much as I admire Rex and his park and rec programs, I got to ask the question. I noticed that it seems like each year between 17 and 18 is 101,000, 19 is 160,000. That seems to be going up 6 to 5% each year, including 98 was your projection for 98,000 for 2020, whereas other items in the budget are going up at maybe half that rate. I'm curious as to why that extra increase?
Well, last year, we added a person for maintenance of the community center. We removed some expenses that were in other portions of the budget relating to maintenance, so that is part of it. We also did our salary study last year, so, you know, you had
Yeah, but
three of your employees
salary
that-
study would affect everybody, right?
Well, no, it was more heavily it affected departments differently. You know, public safety, they're at the top pay, so they're not going to be as affected by that. But if you look at, in terms of what the salary gaps were in Park and Rec, those were really significant, and so had a greater impact on their budget and overall smaller budget than some of the other departments. And so the impact of those, the salary study plus the additional person with salary and benefits in there is probably that biggest impact overall. I think it might be more evident when we skip to the actual Park and Rec budget overall,
Okay.
but
Okay.
I'm wondering how much of that has to do with the forestry part, with the emerald ash borer and all that, the cost that goes on with that?
as much
Because
as,
the forestry part is a, you know, I think it's a double-digit jump.
That went up a couple of years ago, but it's kind of plateaued. That's on the radar screen. The bigger picture, at some point, we had talked in the past of, do we add 10, 20, 30 every year, or just get to a point where we may have to bond for, I don't know, $300,000 to take care of the issue and be done with it. So that's out there. We've talked about that again. So obviously, Tim's got a great handle of that, and that could be something we discuss too when we get to the forestry budget. But you're right, there was a bump a little bit at one point, but it's kind of plateaued with what we have, with the mindset that somewhere down the road, we know that's coming. So it's kind of like, you know, Alice and I are more of the, can we wait one more year? And Tim's like, no, we can't. It's kind of that mindset. But when it's time, it'll be the time, and we'll have probably a debt service need there. Otherwise, you just keep adding, and then all of a sudden, you kind of lose track of where we're at versus, let's get a plan in place, address it, take a bonding if we need to do it there. Or maybe there's a year where we have some excess funds that we could use for that down the road.
And I get it, it's a necessary expense.
Right.
I mean,
No,
it
definitely is.
You can't not address it.
Right.
It's just that I noticed in the, you know, for the total park budget, the forestry is a double digit. And I know they're up against, like I said, that the emerald ash borer, there's got to be a lot of cost in that.
Hey, Chris, we're actually going to be putting together a EAB report after the holidays, probably in January, February at the latest, given to the village board. So you'll find we'll be giving a full update on where we are in the village right now and what we're looking to do moving forward within the next couple of years.
Okay.
That's already in the works.
one other change that probably affects parks more than other departments is the volume of part-time employees that they have. And so in the past, kind of more going towards that salary study, but in the past, we would wait 5-10 years basically before adjusting part-time wages in terms of the lifeguards, for example. Well, then we are falling so far behind, and they struggle to get people particularly in this job market. So what we committed to doing last year was you adopted a new salary schedule, if you will, and every year that base goes up whatever the employees went up. So in this case, the employee salaries went up 2.5%. That is applied to that base schedule for all part-time employees. And so that's affected in other places in the village, but for the seasonal employees, just because of the sheer volume, I think you'll see that more in Park and Rec. And it's just kind of to ease that hiring burden that we have, and then also the catch-up that we end up doing and trying to do some massive study and fix, pay grades from stem to stern.
I think too with the Park and Rec budget, we have, Rex, 22 parks? 21 parks. Plus we had we have the 2 pools now at the high school. We have the community center, and we have a lot of part-time people in that department, but they really run with a lean and mean staff, and they do a really good job. So I think that's part of the equation.
Anything else on page 7?
Yeah.
Good, okay. I think somebody said page 10, 11, was that you?
Yeah, so 10 and 11, now we're into just the general fund, and so this holds all of our primary operational operations, and so these are the revenues that we use, and then the later pages are all the individual departments on the expenses side. So in here, a couple things to point out for me, room tax continues to go up. We've had obviously a couple new hotels, especially since Lodge Kohler and Home 2 Suites. We've seen higher numbers. In fact, I just wrapped up September's room tax report. It's the highest month ever for room tax by far. So Green Bay's doing much better. Obviously, they have the Northland. So as a whole, room tax is going up. So we've adjusted the budget accordingly with that. And then otherwise, most things are fairly status quo. Even as business is picking up, permitting, things like that, it ebbs and flows, and but yet at the end of the day, it stays pretty constant. Other areas are, you can look up and down the line. There's a few variances here and there. We're getting nothing for recycling anymore, so that's out of the budget. Investments, I would expect that to continue to rise, so I added 50,000 there. I think that's a good conservative estimate. Just the rates are up everywhere. So all in all, there's not a lot of change. Certainly nothing really new. We don't sell anything. We can't ramp up production. So we're kind of at the mercy of state aids. Those have been holding fairly steady, going up slightly in some areas, but overall kind of flat and constant.
I have one question, Greg, and I'm sure that there's expenditures that go with it. The adult, co-sponsored programs. 2019 budget was 32,000. 2020 is 61.
Yeah, I think that was more or less me scrubbing the numbers. But if you look at the history there, it's higher. And really, what that is we co-sponsored AYB, AGSA, children's programs, etc. Like AYB, for example, youth baseball. We basically run payroll for their umpires, so whatever it costs us, we bill back. Same with a couple other areas, and that's swim clubs, the other one. So whatever we pay, they reimburse us. Okay. And I think the budget number was just low, so there's a corresponding increase on the expense side as well to match that.
So that you're talking about that 90% increase?
Yeah.
Okay.
Yeah.
I also on that same page, we're showing a high school pool, and on page 17, we show a community pool. Are we running two different?
Community pool, good catch.
Okay.
I'll make a note.
Well, I don't know, because I think it's still there, but I don't know if we're operating.
The old high school pool is filled in, so it's just our new.
It's not as much fun either.
Okay.
So on page 12 is all the expenditures by department. So you can see just at a high level. Then as we go further, each department's broken out in more detail. And then page 13 and 14 gives you all the expenditures by account number. So you can see, you know, all the different accounts that we use and their variations. Obviously, these two totals match, so, questions?
I noticed on page 12, under Park and Rec, we break out the community center, we break out the performing arts center, and I think we have a $50,000 annual obligation towards the ballpark. Where does that come from?
We no longer have that obligation through a change in the lease. That was the very first version. We're still working on what's really a second amendment, but in the first amendment, there was an elimination of our maintenance on that for the first 5 years of the park.
Okay. So can we get a new copy of that contract? Again, I'm basing it off.
Right. I can get you the second amendment. I'm just forewarning you, there's going to be a second amendment coming in the next month or two.
Okay. Now, under the old one, we were getting $200,000 annually in revenue, and I couldn't find that anywhere either. Is that?
That's in TID number 5. It actually is on page 145, and we'll get there. There's a revenue line, a lease revenue line in there for that.
And that correlates with the debt. So in the revised one, they're making greater, there's greater debt, but there's greater debt payments to go with.
Well, the price tag went up, right?
Right,
Because
but
it went from.
there's greater lease payments and then greater debt payments that are offsetting on that, but that's all within TIP.
But the project went from 12 million to 14, I believe.
Looking at Doug. That's correct.
Yes.
Yeah, okay. So, okay, well, okay.
But you won't see it, we're not managing the ballpark per se, so it's not a separate entity,
yeah.
kind of like we're managing the pool or the community center
Yeah.
in terms of.
Well, I understand we're not managing it, but I'm looking for a return on the investment because it's a big investment. I mean, compared to when you take a look at the community center, the pool, and the PAC, that was what, 22 million? We've got 14 in the ballpark. I mean, that's a big investment.
Yep.
Okay.
So if there's no questions, we can skip through and get to page 23. So we just start going through all the different departments. It starts with the village board / administration budget. From here, there's narratives that explain briefly what the department does, any accomplishments, objectives for the next year, and then it goes through the budget by account. And typically what we do is we stop, and if anybody has any questions, we answer those, and then we just move to the next department.
So in terms of something affecting each of these sets of pages, as I mentioned, employees are budgeted for a 2.5% increase in there. There is no increase to the premium on health insurance, but keep in mind, so last year we had we were at about 25 people in 2018 enrolled in our high deductible plan. Through open enrollment that happens simultaneously with this, we had about another 25 people move over into the high deductible plan. So in terms of our budget, you'll see a lot of changes in terms of the health insurance, but that's by virtue of there's people that switched over into the plan that we did not budget. We budgeted and we didn't change that. We didn't know where they would end up. And then the same thing is going to happen this year. We'll end up, so far, if I were to guess, we're probably going to have 90% of the employees into our high deductible plan. So again, you'll see that switch, but we're not budgeting to anticipate that move just in case they don't, if you understand. But so overall, the premium rates apply the same, but Greg has this mothership of a spreadsheet with every employee, their wages, their benefits, their insurance, everything in there, and kind of uploads it. So we kind of try to fix that as soon as we can and dump it into the budget, rather than every time I get an open enrollment, try to update the budget. But that's where you're going to see a lot of swings. So if you're looking at the just the village board administration, there's a big change in it's because everybody is basically on the HSA and nobody is in the,
Now, has the consultant finalized the health plan? Because we were supposed to have our last meeting, the memo we got was we're not going to have it because they weren't finalized. So has that been done?
yes, and then that went to board because we had to start open enrollment. So what she didn't have in time was our stop loss renewal, and then also kind of what that ripple effect was. So that has come back, and it's better than what we anticipated. We were initially seeing, I think it was like 36% increase in our stop loss. So they've shopped that. We're actually changing carriers. And then what we've worked through is employees will get an incentive to this in 2020 if they switch over to the HSA plan. And then in 2021, we will eliminate our traditional plan and go to one plan.
Well, do you know what percentage the stop loss went up with the switch?
The switch now, I think we're down to like 20%, was it? I can try and find it for you quick.
And when does our stop loss kick in? Did we change that at all?
We did not. It's 75,000 with a aggregating specific of another 75,000. And we did have her look at some.
So it's
other
75,000 per case?
Correct, but then amongst that, we have to have another 75,000 amongst those over the 75.
Okay.
I can't read that. It's very small
We
font.
need glasses clearly here.
I know that originally they thought it was going to be a 20% increase, and then it came back that it was going to be like 36.6
Yeah.
increase, but now they,
That's a good
It's only
time to change.
7.2% increase.
What was
for
it again,
the-
please?
Yeah, that's right.
7.2%.
7.2?
Yep. But that's by switching carriers as well.
Yeah.
And then they're still gonna shop. One other thing, like if we had to lock in, because every time you get 1 month's more data, you know, you could go off the deep end or not, but it's a risk. So they're locking in, but they're gonna ask them about some other possibilities, but it didn't seem like they were gonna be significant enough if we changed our stop loss numbers. You know, if we went up to 100,000 per se or something like that.
When that's finalized, can we get a copy of that?
Sure.
The other piece that impacts any department budget with personnel is WRS rates went up very slightly, but they're up just a little bit, so that has an impact as well.
On page 89 with the Performing Arts Center, it like shows a $75,000 contract service. Is that our only obligation for that place, other than the debt reduction, of course?
Correct. So we have an agreement with the school district that we will fund 50% of the director, and then I believe it's 50% of a technical director. At one point, we were going to do, it was a part-time technical director, and there was another part-time employee that was going to be split. They had a hard time recruiting the technical director, so that ended up being a full-time position. But we get billed by the school district. They're actually their employees.
That's our only obligation with that.
Correct. Any questions on the village board administration budget?
Did you want to explain that a little bit further after our conversation today on pool and audit and PAC,
On the pool and the PAC.
as far as expenditures and stuff?
Again, so overall, when we did, we've always had a great relationship with the school district. And some things were written in a series of different agreements. And some things just kind of morphed over time. So, but when we went and did the referendum, as part of that for bonding purposes, we needed to have a very specific agreement about who's doing what. So we actually put together a service agreement at that time, kind of covering everything from this, we plow their parking lots, and we can use their building space for park and rec classes. They similarly can use the community center. We agreed to do the bonding. We mow grass on all sorts of fields. We get to use fields that are theirs. There's, like Valley View, behind Valley View School. A lot of people think that's actually the Villages. That's actually the school district. Pioneer Park, some of it's owned by the school district. Some of it is owned by us. So all these different facilities are really fairly seamless, even though behind the scenes there's two different operations happening. But the school district does all the maintenance, and they pay the heat, put the lights on, all that type of stuff. They pay to clean those facilities. They do all of that. In exchange, we're paying for that. Mark and I were talking today. There's always frustrations on one side of staff or the other, but it's not something, we work so well together, and somebody may say, well, it's frustrating, we're not getting enough money for this particular service, but you really have to offset it because we're getting something else on the other side. Maintaining the pool and heating the pool and all that stuff are extremely expensive. Somebody's paying for that, and at the end of the day, I think our relationship is founded on the fact that we share the same taxpayer, and it's more beneficial for us to work together and try and cooperate to do that, and that's kind of been the foundation of all of that. So there is an agreement behind what we do, but there's a lot of give and take, and some of it's kind of hard to monetize exactly, how many times did we cut grass and how much did that cost versus how much they're paying just to heat.
Well, you do and you don't share the same taxpayer, because there is a segment
95%.
Yep.
on the south end.
Yep.
that's
The
not-
West De Pere School District. But arguably, 50% or more of our pool and our PAC are used by all residents.
Yeah.
And so you still have some availability to the items, whether you do or don't. Maybe moving on to municipal court, no real significant changes there overall.
What page are you on?
I moved to municipal court, which was page 25.
See,
It won't have, I need my glasses.
turn them up.
No, it's okay. It's me, not the light.
If anybody has any questions on the municipal court, the judge is here if you need to ask him any questions, but it's pretty self-explanatory.
Moving on to the clerk treasurer.
Page 27 through 29 is clerk treasurer budget. There are weights and measures. Patrick and I met with the city of Appleton. We contract through the city of Appleton for weights and measures. And the cost structure there, it looks like it's up. It's actually matching what 2019 was. I think we had a meeting late in the year last year, and we couldn't get with them before the budget. So there's really no changes to their cost structure at this point. It's matching what 2019 is coming in at.
The salaries and wages are a little bit higher, but it is a presidential election, so that's basically it.
Potentially 4 elections for 2020.
Right. So on that, moving to the assessor's budget, which is more or less the same. There's an increase, I believe you just approved for Mike Diener's contract for the next 3 years, or fair market assessment.
Finance is next, page 32 through 34.
These budgets are just personnel and the things that go along with them. Any projects or anything else in a separate area, aren't they?
Correct. So what we did, and there were IT, the garage, for the two that had some capital items, we moved those into United Service Agreement money, so if we want to, otherwise, right, most of these budgets.
These we don't have any really control over, so I don't even see any reason for going through all these
Okay.
individual budgets. That's my opinion, but, I mean, they are what they are, and, I mean, the only thing we have real control over is projects or things of that nature, I think.
Correct. I mean, example, general government budget on page 44, for example, those are our liability insurance rates are up, but we try to barter or try to work to get the best rates we can, but some of that's based on history and liability and things like that, so. But yeah, you're right. Overall, these are just, any of the increases, there's notes there that might explain things, but overall.
Well, any large projects or whatever would be coming in front of the board anyway, so that we'd be aware of them at the time of them happening. Am I correct? And then would reflect to the budget.
For the most part, unless it's something smaller. If it's under 10,000 and budgeted, then it would still be approved as part of this. But if
Right.
you're talking about something that was bid out, it would come back to you because you need to award that bid or large purchase.
So basically, to go to the next tab, I mean, this is my recommendation, or if you need a motion, I will, but just move to the special revenue fund tab.
Well, I just didn't, I mean, I don't know if anybody has any questions on each individual. If nobody has questions on them, I've seen this
That's fine.
budget about 100 times, so, I'm okay
Yeah.
with it, but somebody might have questions.
I think, I kind of opened my mouth quite soon about what we should do, but I think we went through some of the important parts already on the ups and downs of percentages on the general synopsis of what we've already worked, or what you've worked on. So to go through it, like you say, department by department or whatever, I think we've already done that, in my opinion.
Okay. Well, then we can move to page 96 and kind of look at the special revenue funds. There's really a couple key points in here. Special revenue funds, I get the question every year from a variety of people. Really what this is take park development, for example. They have a special revenue source outside of taxes. They have the park development fees, and then there's a lot of times rules around how the money can be spent. So those are specific uses. Donation account, somebody walks in the door and wants to buy a tree or a park bench, we have a specific use for those funds. It's defined. The United Service Agreement, we put it here because it's in a service agreement, and then that's one we'll want to talk about because there's a lot of projects in there. And then all these other programs, K-9, DARE, Citizens Academy, Cadets program that's in public safety, we've allocated this out here so that we could better track the expenses and costs within those. And a lot of those, some of those are self-funded or they've gotten transfers from other areas at points in time. And then the employee retirement fund is, the auditors recommended that we put it here. Our employees, it's their payouts when they retire of accumulated of time off. And so that's a constant, that's why we see every year almost a recommendation to transfer funds in here. That's to cover employee retirements, and that's, every year there's a few. So I would recommend that we go to the United Service Agreement, and that's where you're going to see some of the projects, and a couple of those were moved out from the general fund.
What page, Greg?
That is on page 99.
Okay.
And so under the objectives section on that page is where I'm laying out the use of the funds. We have, the garage actually had $20,000 worth of vehicle repairs. These are more or less one-time repairs for rust removal, repainting of a loader, and repairs on a road grader. That it will extend the life of those vehicles until as time that we would replace them. So we thought that would be a good use of these funds. We try, again, with Oneida money to be the best we can to be more one-time use, because we have a good agreement with them, and it's out there, but it's not a tax revenue. Capital items for IT, we have $92,317 allocated for that, and those items are all listed in the next pages. These are server replacements. These would be kind of ongoings. These are areas we've been using Oneida money for. Garage had a couple items as well, $86,000 for hydraulic vehicle lift, a dryer, a tool dryer, and a riding lawnmower. Most of those would have longer life. Doug can answer any questions on those if you have questions.
Why is the riding lawnmower in this area here? Wouldn't that be in park?
It's not a parking, Doug, you used to that?
Yeah, we have a riding lawnmower. We have staff that takes care of some of the vacant lots that the village maintains until they're developed. I guess an example would be the ones on Marvell Lane, most recently here before Nifong purchased them. We're going out and maintaining those, and then we go out and take care of some other ones that, like San Luis Manor, where there is a citation involved, if you will, and we're going out and
Okay, you answered my question already, Doug. So in other words, anytime you got a problem with a constituent with lawn care, you're using your mower to do it?
Correct.
Okay, all right, you answered.
Another use of funds here is $75,134 would also aid, we talked about the parking lot projects. This is going to go to Village Building Fund for help funding a couple of those things, one of them being a study for an expansion study of some of our facility uses.
It's for the garage facilities we have in the back that are used by both Public Works and Park and Rec. What we'd like to do and what Doug has initially proposed was doing a space study and trying to figure out what are the best ways for us to expand the storage that we have, or perhaps organize things differently. Some of the issues we're having is the main garage is heated, but the others are not. And that presents, while it's good to be covered, sometimes that doesn't make something start. It's not warm enough. So we just need to reevaluate our space needs, and rather than just coming up with our own conclusions and building on more space, we're just looking for the most effective way to do that.
And then the other items listed here are all the public safety, these are more annual items, so they have a list of a replacement schedule that we worked with them over the last couple of years to go over, kind of level things out. It's anywhere from fire hose replacement to, printers in a squad car, taser replacements, all, turnout gear, et cetera, et cetera. That's just an ongoing every year list of replacement items that they have, and that's in line with what we've done over the past years, and we'll continue to do in the future. So all these items are listed on these pages where they give you what it is, the accessible life, the description, justification. So if you had a chance to look at those and ask any questions on those. But that would be the use of all the Oneida funds. We have an agreement with $350,848 is what we get in, and then we would spend the dollars down on all these projects.
I know, I think I saw it in here. Was there projects that were not included or not accepted this year?
There are some. There were a couple in parks. Public safety requested 2 additional vehicles, but the vehicles they want to replace, while we're having a lot of issues with them, they're not fully depreciated, so it would actually cause an additional expense. It's not a replacement yet. So we have some solutions for that we're working on, in terms of they're looking at selling some different equipment, that some other assets that are paid off and that they no longer really use. So we'll bring that back to the board when we're ready to do that, probably in another month or so. Park and Rec had a shed that they wanted to build. They desperately need a new shed out at Ashwaubenon. But we decided to hold off on that until we finish the space study, and then we'll bring that back into the future.
So that's page 20?
Yes, yes, page 20.
Greg, what did you say the income was from the Oneida tribe?
I'm sorry. The amount,
Oneida tribe income was?
$350,848.
Okay.
Another item that was eliminated was Rex had proposed a restroom at Fort Howard. And with that was potential additional storage space and consideration for a splash pad out there. What we've asked to do is go back and figure out what's actually our, how are we, if we are to do a splash pad, what does that cost? What type of space needs do we have, and how are we gonna fund that, if we were to do that in the future? So really just trying to get it, rather than just throwing out something with potential additional space for something that may or may not be used, let's look at it in the totality of what's happening there. We reduced the public safety kitchen remodeling from 40,000 down to 20,000. Some of the other things, like they had proposed, that's that Celebrate thing, but that's just not something you really thought would be most effective. So the Celebrate is something we can actually use jointly with Brown County. And it's actually been working smoothly, so rather than have that expense and bear that on our own, it seemed that the cooperative effort seemed to make more sense.
So those were really the items. I mean, some of the other stuff that you see in these modifications are adjustments. So I got better numbers, better estimates. It's a constant process as we go through late August, September, and into October.
Can I ask, how old is the current hydraulic vehicle lift that's being replaced?
Was put in with the village garage construction in '94.
What tonnage is that?
I'd have to go back and look, to be honest with you, Gary. It's the one that lifts up our garbage trucks and our larger trucks.
You said enough there.
There was one that was replaced last year.
Okay.
That was for the pickup trucks and smaller vehicles. The larger one, over the course of last year and into this year, started running into the same issues. We've been doing some cylinder repairs on it the past couple of years, and this year we're running into situations where the lift is starting to drop at different points in time without any control on it. Okay. So the vehicle that's on there is starting to teeter.
I hear you.
It's not good.
That ain't good.
Any other questions about the Oneida Service Agreement purchases?
Any other questions on any of the other special revenue funds?
A lot of the K-9 Citizen Academy DARE, a lot of it's for tracking purposes, and you'll see some variations in there as we're just trying to get a better allocation in terms of how these programs, what they actually cost. Because previously, a lot of the wages were in the general budget for public safety, and so while you're seeing the changes, I think we're still in that phase where it's like, let's figure out what this truly costs and let's assess it. Tom and Randy have done a great job in kind of handing down each of these little programs to a lieutenant to kind of take over and really take a look at what are we providing, what are we doing. Let's get a handle on what our costs are to do it, and let's have some fresh eyes looking at it. So more changes to come in that, but that's kind of why they exist and why you see some variation in what's happening there as people really are starting to dig in.
On the retirement, on page 115, the excess funds that you referred to at the beginning, I don't see a big increase in that compared to what you said you were going to use those funds for.
As far as what we did in the past?
No, with those excess funds that you explained to, the
From
for debt
2017.
service,
2017?
115,000.
the 900,000 or $1 million that,
So we transferred 250,000 back in, or excuse me, 240,000 in
So where does that
2018. It's on the transfers in line in the 2018 actual column in financials. There's other transfers that came in there as well. As quick as we get money in there, sometimes it goes out the door. So it's a constant. And that's why we typically bring it up every year as an option. The other option is going to be The other option of doing this would be to fund it with tax dollars. I mean, we have to pay these out. It's not,
But there's no line item specifically in this page for the transfer in of,
yeah, on page 115, there's a line called transfers in.
What you're saying is the 2020, it's just not in the
It's
budget?
not in
You
there.
have to approve it as that separate agenda item, and then the
Then it'll get thrown in there.
2017, you'll have another, and you'll be able to see it next year. But in terms of what's actually budgeted right
Okay.
now, that's the way it sits. So it's not reflecting the change you're going to do
okay,
next.
well.
I'm sorry, I thought you were
If I'm
talking
translating
some of the
correctly.
prior, yeah, gotcha. I misunderstood, I'm sorry.
Question, if we answer, correct me if I'm right or wrong, K-9 program, is this the first year we've had this in on a budget basis?
Yes, for last year, I thought.
Well, it's been this much consternation, but yes, we've carved it out separately, and we've had some really good conversations about what should it be used for and what should it not be used for, what are the things we need to budget separately. So this was part of really formalizing what comes in and out of that. They're still continuing to do fundraising and look at those things, so we continue to try and get donations into it, but it's also about trying to leave funds in there in the event should something happen to the dog, that we would have funds to be able to replace the dog and then send an officer to go back and train with a new dog.
Okay, so.
But more or less, it's for care of the dog
care-
itself.
Okay.
Yeah.
So there would be fundraisers and whatever for, as far as maintaining it then?
Right?
Okay. Okay.
If there are no other questions, we can, go over to the debt service fund. We talked about it briefly, lists out all of our commitments that are out here for the 2020 year. But at the end of the day, we talked about the tax levy dollars, we talked about the $300,000 that would be applied in 2020. These are our commitments, these are all the debt issues out there, so. There's no other discussion, we can move to the capital project funds, page 120. Street construction is our mill pave program. So we've been ramping that up over the past few years. Doug, do you want to walk through where what's the end number? Well, I shouldn't give you a free rein of that, but we've been trying to go add 25,000 each year so that we can maintain our pay-as rating, all those things, but I'll let Doug talk to that.
Correct. What we're aiming for is an annual amount of around $750,000 a year. What that does, that allows us, with the size of the community that we have now and the center lane miles of roads, of asphalt roads that we're doing work on, it gets us between a 22 to 27 year window on repaving streets. It's a little on the high side, but you have to balance that with your other expenses in the community. So what that allows us to do, like I said, once we get to that $750,000 amount, allows us to get to all of the streets in that time frame. We haven't been at that number for a number of years, but what we have been doing in its place through some of our TIP projects have been, I'll use Potts Avenue or Mike McCarthy Way as an example. That was a roadway that was asphalt. It's been converted to concrete, so it takes that mileage off of your base amount and gives you a little bit of that cushion to get you back into that time frame.
So Doug, this year you've got 650,000 in the budget?
Correct.
Okay, but you're aiming for 750.
That's the goal. Mhm.
Okay.
And
No,
like this year, we
I-
used some excess funds to the
Pardon?
extent, we used excess funds in addition this year to go beyond what was budgeted. So we'll continue to look at that, each year as it comes in based on what the bid is. We were able to use 2018 excess funds to help bridge the gap in terms of the bid received for the 2019 mill pave. So we spent more than $625,000 last year.
Okay.
And
all
we'll,
right.
in 2020, look at the same thing, if it's a possibility with 2019 excess funds to help do that in 2020.
And that's why I said in the beginning of the meeting, start with our total levy. Number one, debt service. Number two has been a priority for mill pave.
It has.
And then look at everything else. And that's including a $25,000 increase each year. That's what we're planning If we could do more to get to the 750 quicker, we would, but it's challenging, so.
Okay, it shows that we're doing a good job. Some of the people I talk to, they're amazed at the work, or our roads and how good a condition they are compared to some other communities.
Roads are very important to people. I hear about them all the time.
Oh,
They
yeah.
tell me how great our roads are compared to others. So,
The village building fund is next. We did talk about the parking lot resurfacing. We talked about the garage and cold storage expansion. There's money being transferred in, but the expenses are housed in this fund. There's also rewiring of a generator in the back that'll add new life to that unit as well. Park and Rec has a number of projects. Bleacher replacement, we've seen that last couple of years. There's a systematic replacement of the bleachers at different parks. Diving board replacement, a Moby mat, which is, again, thanks to the Lions Club for the donation to cover that. Some playground equipment and other upgrades and some mannequins listed here. Rex can answer any questions if you have any.
Now we'll go to public safety.
Public safety, likewise, we talked at Oneida money coming in. Here's a list of all the items. These are pretty much what you'll see on an annual basis: turnout gear, bulletproof vest replacements, fire helmets, etc., radios in the vehicles. Tom and Randy have done a great job of, just trying to smooth these out so we don't have huge blips and, replace 2 or 3 a year versus 7 in 1 year and none next year. And so we're just trying to smooth that out so that they get everything they need as well. It helps the budget along the way.
yeah, I always say they have the stuff that expires so that we don't.
In a lot of their equipment that the public safety has, who mandates the longevity of, I'm looking at vest and a number of different items on there. Is that something we set, or is that set by the state?
A lot of them are national standards, like NFPA, National Firefighters, something. Sets all the fire equipment type stuff. A ballistic vest is really, that's coming from manufacturers?
Yes. For the fire gear itself, it's a 10-year life on those, and that National Federation of Fire Protection sets that. And then for our vests, it's usually over a 5-year time period that the material itself will start to deteriorate over time from washing it, body movement, stuff like that. So.
Okay.
Some of it, like a cyanide kit, some of that stuff is just a shelf life in terms of how long they're good for and what happens. Others are, some of their equipment, it just, like an in-car camera, it's only going to last for so long just from a technology standpoint, and something they're using 24/7.
Just a question, I guess. I mean, I'm going back to page 20, back and forth a little bit, just to see what projects were eliminated and which ones are accepted in here. And just to get an idea, if we were to add something, let's just say $10,000 into these projects, what would that do to our mill rate? So, just to give me an idea, just to give us an idea, if there's a project that was...
A penny is about $22,000.
A penny to the mill rate is 22,000. Okay. Just wanted to know what that was.
Yep.
Okay, thanks.
So on page 138, we do have a small fund balance in our land sales and acquisitions. We don't have a lot of land. At some point, we sold some. We just have a balance lingering there. We'd like to keep that for future purchases, or potential purchases, and things like that. So that's just a balance. There's really no budget for that. That could come up. Obviously, any use of that would come before the board. After that, we have our 3 TIF districts. So there are some things that we know we're going to be doing in those. Obviously, in the TIF, we always bring this up. As something comes up, it's coming before the board. So we're not locked in that if it's not in here, we can't do it. But these are some of the things that have been out in our long-term planning. So in TID 3, we have Vanderparen Way and sidewalk construction on Ridge Road, and a traffic hazard elimination application. So other things can come up, projects within these. We do have, we're starting to see some really good increment flowing through these districts, and we're looking at we've got a total, let me pull it up. We're seeing increment of closer to 5 million in total between the districts, and that will just keep continuing to grow. Remember, there's always a delay, so you have construction year, valuation year, and revenue year. So as projects finalize, you don't see the revenue usually, depending on when that valuation's 1/1 of a year. It's the next year you see the revenue. But obviously, we've got between the title town and what's going on out here, there's a lot of potential value coming, which will help alleviate our debt service needs, so, and potentially open up the door for more projects. It's tax. That's tax. It's a tax, yeah.
Tax revenue.
Tax revenue of 5
Tax
million, not
revenue.
growth, sorry.
Just
The
making
growth is
sure.
about, over 200 million. The one project in TID 4 that we've talked about is at the sports complex plaza, putting a road through there, through that main entrance area, so I don't know if you have any questions. It's just in process.
We're working on some different designs. It's really a maintenance nightmare out there, and so we're just looking at some ways to increase accessibility, improve the connectivity between the 2 different parking lots that are out there currently. They're completely separated, and people have to drive around, so we're trying to solve that. And then the overall maintenance of all the different stairs. So I think we're pretty close to a new design and getting that priced out, and then that'll come back to you so you can see the design and approve. We'll go through an actual bidding process then at that point.
So we can move on. The next section are the what are called enterprise funds. These are our utilities: water, sewer, stormwater. I don't know if you have any specific questions. Fairly status quo as far as operations are concerned. Same staffing. Doug and I are meeting with the auditors on Thursday to discuss the rate review between the water and sewer utilities, and anything that results of that will come before the board. So the revenues could potentially be adjusted depending on that timing of that and how that flows through. So I don't know if there's any specific questions Doug can answer, anything you have here.
Just one thing that I picked out here, tower rentals, is that cell
Yes.
towers up there? Okay.
That is correct. In terms of the sewer utility, that is not regulated by the Public Service Commission. That is strictly oversight by the village board. So when we do rate increases there, that's worked through you folks. With the water utility rates, those go before the Public Service Commission for approval, just like WPS's rates and other rates. And that's a submittal process that we have to go through. We have a lot of input on that, but a typical rate case now is running between 9 to 10 months. So what Greg said is correct. We're meeting this Thursday. Once we have the data to go forward, the earliest we'd see a rate increase or adjustment in the water utility would probably be towards the end of 2020. It's quite a lag right now in terms of the approval of those rates. Just giving you that for background information.
And also just a reminder that there is the splash study presentation on Thursday at 10 o'clock or 10:30?
10:30.
10:30.
Okay.
Oh,
Thursday at 10:30 at the Ledgeview Town Hall.
It's going to be a tantalizing conversation, I'm sure.
I noticed that we don't have the Babcock Road pond construction.
Good
That's
one.
because we don't have a pond on
Yeah.
Babcock.
Well, you're reading my mind. I have page 159 open as we speak.
Do you have a specific address for that?
Yeah, sorry.
Good one, trustee Williams.
Well, we're almost there. The last section is internal service funds. To explain briefly again what that is, basically, we house funds, we pay cash out, so we have our dental insurance, our health insurance, and then where we buy equipment replacement, where we buy all our vehicles. Money goes out the door, but then each department, based on employee, department, or vehicle, the home of the vehicle, is charged back on an annual basis, and that's how this gets funded. So if you take a vehicle, for example, if it's a Public Works pickup truck, at some point there's an initial cash input, but as it over time there's cash, you buy the vehicle with cash, say it's $40,000 out the door here in this fund, and then each year, if it depreciates over 10 years, let's say, every year for the next 10 years, $4,000 gets charged back to that department through the general fund, and that money is billed and dropped into this fund. So in theory, in 10 years, you have $40,000 again to buy the next truck. So that's how these funds work. So we're self-funded from an insurance perspective, so that's why they sit here. So dental insurance is all the village share, and the employee share is run through payroll. The revenues go in here, and then the expenses as claims come in are paid out through here. So that's how these funds work.
In terms of a percentage, what is the employee share on health and on dental?
So
Dental's 10%.
And 11% on the,
On the 11% on the PPO of the health insurance. On the HSA, it's 0%.
It's what?
And the HSA plan, it's 0% to the employee.
And that's where we've had the migration to.
Correct. Now, they have a, you know, obviously the deductible up front. At the end of the day, right now, it's pretty much a wash, the cost to the village, if you will, between the plans, because we're about, I think we're at 59 on the PPO currently and 51 in the HSA. And as Allison alluded to earlier, we'll probably see a higher migration over.
I think in the private sector, nationally, the average contribution is about 27%.
Even with an HSA.
That's with an HSA in the private sector. That's the employee contribution. Unionized organizations run around 20%. Something maybe needs to be looked at.
Can we talk about this new fire truck or the refurbishment? I thought we just got a new aerial truck.
we purchased a Quint. So this is actually the ladder truck, which is a different thing. The ladder truck goes up higher than the thing we bought, okay? Randy can touch base on it, but it's essentially trying to extend the life of the current piece of equipment. But we would need a ladder truck, like we can't.
Yes, so this is the 1994 Pierce ladder 311, and it's the 100-foot aerial platform. We had Pierce come up and look at it in Red's Power Diesel that we do a lot of our work with, to actually look at the truck and make sure that it's good for refurbishment. So they deemed it really in good shape for this. So with that, versus 3 years down, if we don't do anything, 3 years down the line, you're looking at probably $1.5 million to replace the truck. This will get us another 8 to 10 years with our current truck. We just have to do some updates to it.
Didn't I hear some talk about partnering with the Pier or something, or?
Well, go ahead. I mean, it's about trying to share that truck, but then it's more than sharing the truck. It's also about sharing staffing. And so in order, their ladder truck goes out more often than our ladder truck would go out. So we would have to increase staffing for the Pier to share that truck. And at this point, we're not prepared to do that. It would be a significant increase to us. in terms of our overall year-to-year costs.
I know we've been doing more shared services between municipalities and everything, and when I saw this and everything, it's like, we're doing more, and
Yeah, good concept. I think it's just a little, it's harder, I think, because we're such two different systems and how they operate and what goes out first and what doesn't.
I've had conversations with the De Pere mayor and their fire chief, and Randy and I have had conversation about this. I talked with the Fitch study group about this, and they have to buy a ladder truck now. They have to order it now to get it in a year and a half. And right now, we are not prepared to do that. And like I talked to the mayor and I said, you know, that might be something that we can work towards, but right now, because of the staffing issue, it's not something that will work for us.
And they don't have an interest in sharing in our refurbished truck.
Correct.
either.
They don't want the refurbished ladder truck.
okay.
The other pieces of equipment that we have slated for replacement are our garbage truck in Public Works. It's just time to replace one. Dump truck as well. We've had it for 19 years. And a heavy-duty pickup truck. And then the Forestry Department has a pickup truck and a plow for the pickup truck. So there's a lot of moving parts within there. Sometimes we take an existing piece, move it down to another piece that's even older, and some cases I think Fred Flintstone type vehicle where your feet can touch the floor as you're driving, the street as you're driving. So we don't just always sell off the equipment. A lot of things are pushed down, and something else down the line is pushed out the door. So Rex and Doug and those guys do a good job of, and Tom and Randy do a good job of reallocating resources from within.
One thing we learned on the garbage truck, so we like to try new things, and sometimes they work, sometimes they don't. But if you recall, some years ago, we felt the chassis to the garbage truck was in good condition. We just needed a new box, so we did put that on there. But it just doesn't line up the same is maybe the best way to put it.
Yep, that's one of the that's the garbage truck that you see for replacement. It was about 7 years ago, excuse me. The decision was made to keep the chassis of 2 existing garbage trucks and take the packer and the storage bin off the back and just replace those. And the discussions with a couple other communities, I guess, at that time was that it worked well. They had them for a year. They were happy with them. And to be quite honest with you, we'll never do it again. The issue that came about was the hydraulic systems that are in the back of those trucks that pack the garbage together. When you retrofit an existing back on a chassis, you have to make sure that that ram stays perfectly centered, or else you start pushing the ram itself out the side of the garbage truck, of which we were successful at with both vehicles, and did welding repairs on them. So it was a great idea, a great thought at the time by those working here. Fantastic idea, but in practice it didn't work out for us.
So it cost us less than buying a whole new truck, so it was a good, worthwhile experiment.
It still saved us a little.
We're not going to do
Still
that.
saved us a little money. Unfortunately, we were picking up garbage on a couple streets on a few days.
Doug's, are we using any of the garbage trucks for a leaf pickup?
There is one garbage truck that was decommissioned, one that was replaced,
It was decommissioned as a
and
garbage.
then we took one of the leaf suckers and put it on the back of it.
Oh,
Correct. So it isn't a daily garbage truck any longer.
all right. You've answered a lot of questions.
That's what we're here for, Gary.
Okay. Park Department's getting, Forest Department's getting a pickup truck? Is Tim riding around a lot?
The forestry, the pickup truck, technically, that will be going to forestry is currently our park maintenance foreman's truck. What we need a new vehicle for is the watering trailer, which goes around 3/4 of the year. We need a heavy-duty truck to pull that. We're using the 2001 basically a hand-me-down from the water department, a 3/4 ton truck or 1 ton truck that's pulling that. That one has no floorboards left. That's the Fred Flintstone vehicle that Greg was talking about. So we need a heavy-duty vehicle to do that. The oldest pickup truck we have in our fleet that would work for that is our park foreman's truck. So we're going to move that down to pull the water truck, which will also be used in the wintertime for plowing. And then the park foreman will be getting the new truck. So it's a shuffle of vehicles, basically, Gary.
Okay.
And with that, we've run out of pages.
We need a motion to
So-
approve this?
Well, there's two things. I mean, I like the way this is presented and everything, and I'm not going to make a motion to change anything at this time. But there's two things that I would like to see us look at for next year. One is a breakdown of the fire inspection fees for next year for businesses and what the reimbursements are from the state and the expenditures on those fees, on what we're spending them for next year. We can work on that and see what we can do with it. Second thing is another thing that I brought up last year, and it's not on this year's budget, even with Oneida Service Agreement monies, extra monies, unspent monies, is Wayfinding Signage. It's being called for out there again and again and again, and I'm not going to let up on it because I know that at one time there's one trustee that didn't let up on Pilgrim Way reconstruction until she got it. I don't know who that is, but I don't know who that is.
My suggestion was to just say that we were investing in Google and it was free and it was an awesome return on directions investment.
I know,
Nope.
I've
I'm not
got
gonna-
that note sitting on my desk, Mark. Actually, I talked to Ken about you and I and
It's been a year.
Allison, Ken, I know. So we
So
have
those two
to,
things I would like to look at for next year, or one way, shape, or form. And I know we've had discussions about them in the past, so.
okay.
What is the new number that you're looking to get approved from us this evening? Because I know it's not in this.
Right, so everything stays the same. The one piece that changes is the tax rate. So again, all the numbers, the levy stays the same, and all these budget numbers stay the same. And the tax rate, if we go all the way back up to page 1, that tax rate would change. Instead of 567, it'd be 568.
Are they approving that tax rate or are they approving the?
So
You're actually approving the budget as presented, which the rate is a result of that budget, if you will. So you're approving the levy of 12,558,518. That creates the tax rate.
So keep in mind, you'll see the entire budget again. We won't hopefully have this lengthy of a discussion. But at the November meeting, you'll have a resolution. There will be officially a public hearing on the budget, and then you'll more, I think what you're getting to in terms of what we're approving as the levy dollars and the tax rate.
So we're approving a preliminary budget at this time, not the budget itself.
In terms of the final action would be at the meeting in 2 weeks or 3 weeks,
November
whatever.
26th.
Typically, we approve it as laid out, then it comes back again, and it's a formal adoption, public hearing. There's actually a resolution that will be placed
So-
before you.
If I make a motion that we approve preliminary budget of $12,558,518 for a tax rate of $5.68.
That would be fine at this time in the budget as presented, correct?
So I'll make that motion.
I'll second the motion. So in other words, it is not going to change from here when it comes to the board.
Correct.
Okay.
You can still change it. I don't want you to think that you can't. So if something occurs to you, we can talk about it, we can change it. But just so you know, like, this is the heavy lifting part, and the next time we have to put out a publication with so many days in advance to when you're officially doing all of that. So there'll be
Okay, all right,
a
understand.
little more formal action coming up.
Understand.
You're not done, but you're kind of done.
So we have a motion and a second to approve the budget with the levy dollars of $12,558,518 for a tax rate of $5.68. Any more discussion? All those in favor say aye.
Aye.
Opposed? Motion carried. You know, well, and it boils down to that assessment ratio thing. We had to go up 6 cents to get $10,000 more. But, oh well, we did it. Great job, great job. Thank you, Allison, Greg, all the department heads.
There were really a lot of great discussions amongst the department heads this year, so I really appreciate that. There was a lot of discussions that have not happened in the past, just in terms of trying to share vehicles, swap vehicles, a lot of really openness, and much appreciated.
Yeah. Okay, now we can go to 5B. Use of 2017 general fund excess funds. Great, here we go.
So we laid that out earlier. I don't know if anybody has any questions.
Essentially, what you're doing then is approving movement of the 2017 general funds for the 600,000 for the debt service, really those last four numbers that are on your green sheet.
Correct.
The 115,651, the 600,000, 116,866, and 35,948, as presented in there.
Okay, are you
Make a
making that motion,
Sure, I'll
Mark?
make a motion.
Do we have a second?
I'll second.
I have a motion by trustee Williams, second by Chris Zerbal, to approve the use of 2017 general fund excess funds. Any more discussion? All those in favor say aye.
Aye.
Opposed? Motion carried. Okay. Number 6, Patrick.
So technically, we need a motion to adjourn, though, from the Finance Personnel
Yep.
Committee only, because we're going to throw you for a loop, and we're going to do a brief, the village board closed session. It's on a development issue, so we're just going to tack that on the end. So village board is going to keep going, but Finance Personnel is done. So you need a motion for the Finance Personnel Committee people need to make a motion and approve that, but only those people that are on that committee.
So moved.
We have a second?
Your second?
Sure. All in favor of joining finance and personnel meeting, say aye.
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 Opposed? Okay. Village board is still.
Yep.
That's it.
Still going.
Just a side note, good work, Greg.
Could you go next slide?
And now you can do closed session for village board.
Thank you, department heads.
During the meeting, the village board of the Village of Ashwaubenon may convene into closed session pursuant to Wisconsin Statute Section 19.851E for the purpose of possible discussion and action on deliberating or negotiating the purchase of public properties, the investing of public funds, or conducting other specified public business regarding the development of parcel VA 1404 related to tax incremental district number 3 where competitive or bargaining reasons require a closed session. The village board may thereafter reconvene in open session pursuant to Wisconsin Statute Section 19.852 to report the results of the closed session and consider the balance of the agenda.
Need a motion to go into closed session?
So moved.
We have a motion and a second to go into closed session. Roll call.
Trustee Allison Williams.
Yes.
Trustee Paul.
Yes.
Trustee Zerbal.
Yes.
Trustee Mark Williams.
Yes.
President Kardowski.
Yes.
And again, trustees Bukowski and Melchewski are excused. We are in closed session.
There we go.